Good morning, students. Good morning to all of you. Sorry, students, in the morning the system got stuck. I could not connect with the server. And now, students, we will now finish it off the TCS. In the evening, students, I'm starting with a new topic. Then I'll start with a new topic in this context. Let's start, students, in this particular context over here. On the TCS front, there is only actually one question, but the concept is equally very important. Aishwarya, Kavita, Kima. So on the basis of the concept, students, the concept becomes very important so far as the TCS is concerned. And therefore, students, I will request Krupa, good morning. I'll request to all of you to ensure to take a note of the concept which is involving in your TCS. The notes that you're going to prepare, students, as you all are aware, the notes, students, that you all are going to prepare would be how you're going to make it. Indeed, on the horizontal way, isn't it? Horizontally, you prepare the notes. Quickly, you will make the notes so that your last day revision becomes very, very simple, students. Your last day revision becomes very, very simple. So therefore, that is the entire objective, that your LDR, I'm preparing your notes for the LDR. So you do it now and only you revise it. Only there is only one question which are there, students. Anyways, after making that notes, the question becomes very simple. And there is only one question which is there of your past year's papers and all. So therefore, there is no much challenge in this case. You just focus on the notes. The notes clarity should be there in your mind, and that is all of it, students. So therefore, you can handle any questions now in the examination. Is that clear to all of you, students? So let's prepare on this particular part, students, so far as the concept which is there on the TCS, the tax collector. Now there are some couple of different students that you are going to realize when it comes with the tax deductor. Even those different students, I'm going to point it out with all of you. That is the beauty of it. Even those different students, I'm going to point it out with all of you, and therefore that difference will help you to really appreciate what you did for TDS and what you are doing for TCS. Let's start, students, in this particular context then. All of you ready? Perfect, students. Okay, let's start. So, students, first and foremost, students, over here, the TCS provision, you all are aware, students. TDS is in section 51, TCS is under section 52. That you need to remember, students. Interest was in section 50. Payment of tax, students, you know, ECL, yeah, all that ledger that we have read, that was in 49. The ledger that we have read was in 49, students. That exactly is the scenario. Now, in this context, students, the TCS, if you see over here very, very carefully, in this context, first of all, the tax collector is a real game. So, first of all, who is the tax collector? Who will have the obligation under section 52, students? Who is the tax collector, students? So, tax collector, students, is the ECO, in which the ECO, through whom? Through which other supplier makes their taxable supply, makes their taxable supply. And now, most important point, students, that you all are aware in this context. Here is the second point, is the most important one. And what is that? Where the consideration, students, where the consideration with respect to such supplies is to be collected. Students, this is the most important part. Is to be collected by whom? By the E. Only then section 52 is going to be made applicable. So who is the tax collector? Who will be having the obligation under Section 52? The tax collector is the person who is an ECO, through which other supplier is making their taxable supply. Isn't it? Not only that, that ECO should also collect the consideration in respect of all such supplies. Only then, students, it would be what, students? It would be a case of obligation of TCS under 52. Please understand one thing. What is the very underlying objective of this, students? TCS, they need to track the transaction. Students, they will need to track the transaction. The transaction trail has to be established. Understand one thing here. Every one of you are aware of this particular part, students. Every one of you are aware of this particular part. And what is that? See, here it is a supplier. Here it is a supplier. Here it is the ECO. And then here it is a customer. See the model over here. Now, if this is the kind of a model that we are having it in this context, students, the next point is also known to you. First of all, here in the customer primary will approach the ECO. ECO will connect it to the supplier. So in this context, please understand, here the consideration is paid. Order plus consideration. Order plus consideration, or maybe there could be a COD facility that will be given. And then there is a supplier who would be having this particular thing. Then the ECO will connect with the supplier accordingly in this case. So here in this scenario, connecting to the supplier, and then he will supply plus make the tax invoice. That is what he is going to do. Now, after that, students, as you know, this person thereafter, point number 4, he makes a payment of consideration. Now, the fact that, please be careful, here at this particular point of time, the TCS obligation would be necessary. At this particular point of time, students, the TCS obligation would be necessary. So this is the combination that we are looking into it. Why this particular concept has been introduced? Because please understand, if the customer is paying the consideration to ECO, and then the ECO is paying the consideration to the supplier, so therefore the government should have a complete track of the transaction. Because understand one thing, the actual supply has been done by other person. In this case, in my example, is say Mr. A. Mr. A is a supplier. So the actual supply has been done by Mr. A. Now, if the actual supply has been done by Mr. A, this entire loop which we have created, this is to ensure what? To ensure the track of the transactions. To ensure what, students? To ensure the track of the transaction, students. That is what it is. How the tracking would be done, students? Now, students, in this case, the ECO, be careful over here. They will be paying the GST. Pay GST. And for that, there is a GSTR7. That will come into picture. They will pay the GST. GSTR7 would be through the GSTR7, and GSTR7, when they are going to file it, students, by 10th of next month. Students. In this context, now just understand one thing: the supplier who is there over here, in this case, this supplier, what he will have to do? Now he would want to, in fact, please understand, students, you know, this supplier first will have to file the GSTR1. What is GSTR1, students? The GSTR1, students, this is the first thing that they will do. It is statement of sales, statement of supplies made. Now, in that statement of the supply which has been made, the supplier has to disclose all the transaction which he has done. And in that transaction, don't you think that he will have to also discuss this particular supply that he made through the ECO in GSTR1, whether the supplier will he be required to also declare the supply that he has made through the ECO? And the answer is yes. And that is what he will do, and thereafter he is going to file the GSTR 3B. Then the GSTR 3B will come. Now, when he files the GSTR 3B, at that point of time, he will be in a position to this. This will be the TCS. The TCS which is there will enter into your ECL, electronic cash ledger, and thereafter through the electronic cash ledger he will adjust what? Adjust to pay his GST liability. Pay GST liability. Just like the way TDS has entered into your ECL after all the validation. When the validation is done, when the validation students, I taught you about the validation concept. So the moment the tax collector, who is ECO in my example, the moment he will file his GSTR 7, then the auto population will happen. And through that auto population, thereafter, the supplier, Mr. A, will have to validate all those declaration given by the tax collector in that particular GSTR 7. And once the supplier validates that yes, everything is fine, then automatically what happens? That TCS will enter into his ECL, electronic cash ledger, and through the electronic cash ledger he is going to make the payment of its GST liability. That is the entire loop. All of you are aware of it. That is the entire loop, students, which you all are aware of it. So this is how the things has to be looked upon. I hope that every one of you are clear with this one. Now what I'm trying to convey to all of you students is about this particular part. What is that? This GSTR1, which has been the case. The GSTR1 students, which has been the case over here. And through this particular GSTR1, the first statement, in that statement, students, definitely they will be putting the entire statement of supply, and in that statement of supply, whatever the supply that Mr. A has done through the ECO, even that supplies has to be declared in your GSTR1. So entire focus of this is what, students? Now through this entire thing is what? By introducing the TCS concept, don't you think that what they are trying to do, students, what they are trying to do, they are trying to trace the transaction, that Mr. A has done. So through this, they are tracing the transaction that Mr. A has done. That is the entire objective. That is the entire objective. Otherwise, there would be a lot of misreporting. So far as Mr. A is concerned, if this TCS is not deducted, then what happens? Mr. A will then be in a position to misreport a lot of things. If the ECO is not under the obligation to do what, students? If the ECO is not under the obligation to collect the TCS and then pay to the government, then the government may not know these supplies which Mr. A is doing to his customer through the ECO. So that level of supply would be gone. And hence the concept of TCS. Now tell me one thing, students. Now, if you have understood this concept, now that is the reason why, students, ECO, who has the consideration collected from the customer, so from that consideration they will collect what? The TCS amount. From that consideration they will collect the TCS amount, and then they will make the payment to whom? To Mr. A. From the consideration students receive from the customer, the ECO is going to collect the TCS amount, and then they are going to make the payment to the supplier. But let's take this example, students, a bit further. Supposingly, the customer, the ECO who is there, he does not collect the consideration at all from the customer. What he does is that once he gets the order, he directly tells, look, Mr. A, I got a customer. You deliver the goods to the customer and collect the consideration from him. And for that, connecting you to the customer, connecting you means Mr. A to the customer, my commission is 2%. In that case, what happens now? Whether this ECO, will he be required to collect the TCS under section 52? Whether he would be under the obligation to collect the TCS under section 52? And the answer is no. Why? Because, what is the reason? Because this particular condition is not satisfied. That is, the consideration is collected by ECO. So the ECO is not under the obligation to collect the TCS. And why is not under the obligation? Think logically, students. Here directly Mr. A is dealing with the customer. Here, Mr. A is directly dealing with the customer, and the consideration is also customer is also paying to the bank account of Mr. A. So all the transaction is happening between Mr. A and the customer. So where is the ECO being involved in this case? ECO was only intermediary to connect the buyer with the seller. That is it. So in such particular case, the ECO will not be under any obligation to collect the TCS. So the collection of TCS will happen only when there is an obligation to collect the consideration. So if the ECO is collecting the consideration on the supply made by the other person, then yes, the ECO will be under the obligation under section 50. What is the obligation under section 52? To collect the tax. Now, friends, as you know, in this context, the second particular point, friends, which has been there. What is the rate of TCS? Now, the other points are simple points. The rate of TCS in this regard. All of you are aware of it. TDS was 1%, 1%. TCS rate is 0.5%. CGST 0.5%. SGST. And if it is an interstate supply, then 1% IGST as a case may be. So that is the rate of the TCS. The third point is an important one. What is the value, students? Value on which the rate would be applied. So the value, students, has been given is under section 52.1. Is under section 52.1. And the value, students, that has been there over here is about what? It is about what? Indeed, this is the word that they've used. The net value of taxable supply. Now, how you arrive at this net amount, students? Let's see. How do you arrive at the net amount? Value of taxable supply. This is during a month. Minus from this taxable supplies return to the supplier during that month. So whatever has been the sales return that has happened for that month for which you are under the obligation. Like if it is the month of January, so whatever is the supply that has happened in the month of January minus whatever has been returned, sales return that has happened in the month of January, that will be reduced. That will give you, students, the net value of the taxable supply. The net value of the taxable supply. That exactly is the point, students. Now, please understand one thing, students. You should, obviously, this is for every transaction. No? This you are not doing on a gross basis. For every contract, this is for every transaction, students. Every, not transaction, I will say, not every transaction. This we will say for every registered person or may I put it like this? For each supplier. So Amazon, students, say for example with Tata Tea, that is one supplier. The another is, in this case, is say a particular company, say whatever be the book company, say for example, say Taxman. So Taxman is another supplier. Say Bharat Law House, third supplier. So for every supplier, they will make the statement because the TCS is vis-a-vis the supplier. So for each supplier, this statement would have to be prepared for every month, and therefore what they will do, whatever is the value of the taxable supply for that month of January for each supplier, minus from that whatever has been the returns that has happened in during that month for that supplier, they will reduce it. That will give them the net value of taxable supply. That will give them the net value of taxable supply, and on that the applicable rate has to be put up across in this case. Now students, in this regard, be very careful on this particular part. Now students, over here about the applicability and inapplicability of TCS under section 52. Now what about this applicability and inapplicability? So if there is an ECO, students, and then there are supplier of goods and for services, be careful. So students, if on this particular context, again there are two situations. ECO is acting as an agent in this context, students. What does it mean, students? ECO is acting as an agent. We all know. First, that supplier will put up the goods to whom? To the ECO. He will send the goods to the ECO. ECO will then deliver that goods to the customer in his own invoice. Remember, those things we already know. And then there are two supplies. One from the principal to the agent, and then the second supply is from the agent to the final customer. So in that particular case, students, here the ECO is acting independently. He is doing his own supply in that context. And for the Mr. A, the supplier, ECO happens to be the customer for the GST purpose. ECO becomes the customer because the tax invoice that Mr. A will raise now will be on whom? On the ECO. That is what we learned in supply chapter. The tax invoice that Mr. A will raise would be on the ECO, and then the ECO will raise a tax invoice on whom? On the final customer. That is the point, students. So ECO is acting as an agent. Here we know, students, what happens? There are two supply that has happened. Which are two supply? From ECO, from supplier to ECO, that is supply 1. And then from ECO to the recipient, that is supply 2. So if this is the case, here ECO is going to pay the GST on that supply to the, on the supply to recipient, and hence no TCS, and hence no TCS. And so far as the other cases are concerned, students, whether the TCS is it applicable, and the answer is yes. So this is the only case which is about inapplicability. This is the only case of inapplicability, students. Come to the other particular part, students, over here. There are two cases over here also. Remember, students, there are some 9-5 notified ECOs. Which are those notified ECO? You may be aware of it. Who are also doing the supply on their own. Isn't it? Like Urban Clap, like Oyo. So they are ECO as well as they are the supplier. So they are ECO come supplier. So therefore, again, the moment ECO is a supplier by himself, then this TCS is not going to be made applicable. If the ECO is a supplier by himself, then this TCS is not going to be made applicable. This is what you need to remember it over here. That's clear to all of you? So services notified under section 9.5, wherein here ECO is a deemed supplier. So here also same thing. ECO to pay GST, and hence no TCS. In other cases, students, TCS would be applicable. So I hope that all of you are clear with this one, students. Every one of you. That exactly the point. Over here, students. Now, students, as you are aware of it, all the other particular points are just now herein, if you remember, students, in the context of once you've understood this particular part, the things are being dealt with it. Now, just you will put up the same chart, students, which I have prepared for you for TDS also. Remember one particular chart that we prepared for TDS? A similar chart will prepare for TCS. This chart will be comprehensive enough to cover up all the points. So that will be the revision that we will make, and that is how we are going to end up this entire. Students, over here, students, in this context, as you are aware, students, that transaction non-taxable supply, or may I say, remember, students, in the TDS part, I taught you that in the supply which is not subject to GST, those supply will not be subject to TDS. That is what we discussed. Similarly, in the supply which is not subject to, in the supply, students, which is not subject to what? Subject to GST, then those supply also will not be subject to TCS. Is that clear to all of you? Same thing that we discussed for TDS will also equally apply for TCS as well, students. So please take a note of it over here in this context. So therefore, which are the transactions? Similar chart. Students, remember that. One is the what? First, we need to identify which supplies are not subject to GST. So one is the transaction which is not a supply itself. Transaction which is out of the scope of supply. The transaction which is out of the scope of supply. That is the transaction, students, that we're talking about it. And the other one, students, if you see, is about what? Transaction which is falling within the scope of supply of goods and service. And here, which is falling within the scope of supply, even that we have known as non-taxable supply and taxable supply, isn't it? So over here, students, one example, students, if I can just share with you as an example, students, over here, students, supposingly like makan.com, or maybe there are many websites which are being there, as you all are aware of it. In those websites, students, what happens is this, that you are selling your house through those things, isn't it? Nobrokerage.com, or maybe there are some other like realestate.com. So through those particular, these are the ECO. Now you put the listing of your flat that you want to sell it off. According the flat is sold. Now there is this is the ECO. Now there is supply. Is it a supply then? Because it is sale of an immobile property, and the answer is no. So because it is a sale of an immobile property, accordingly what we say, that this is not a supply, and because it is not a supply, therefore no GST. And if there is no GST, whether the consideration which is received by this uh, this nobrokerage.com or makan.com, whichever, or realestate.com, whether the consideration received by them, will they be deducting the TCS? Answer is they will not be deducting the TCS, students, in this context. So therefore, in this case, Makaan.com helps you to sell your home. No TCS obligation. Since sale of flats is not a supply. So no GST, no TCS. No GST, no TCS. I hope that all of you are clear with this one. Every one of you. Now the transaction, which is the supply, students. Be careful on this one. Again, there is a split of two. What is the split of two? Non-taxable goods or service. Non-taxable goods or service. And the second one, students, as you know, is the taxable goods and service. Now, students, one more thing which I just wanted to tell to all of you. When we do ITC, students, ITC topic. See, ITC has got many questions. I will do through the practical, I will take you to the theory because the questions has got multiple layers. So we'll do the practicals and through the practicals, we'll attack the theory. Is that clear to all of you? So that will be a completely ITC topic that we are going to launch will be completely practical oriented because it should not so happen that the theory is taking time and then the practical is gone by. So ITC I'm taking up in a very unique way for all of you. We will do a reverse order over here. What is the reverse order? With the practical, we are going to jump into the theory. What are the relevant portions of theory? That is how we are going to do it and that is how we are going to apply it. I hope that all of you are clear with this one. This is the approach for the ITC so that ITC also gets over properly with a lot of practice because ITC requires practice more than the theoretical aspect. That will require more of the practice aspect. So therefore, without wasting any time on ITC, directly the approach would be that from the practical, we'll jump into the theory. And then obviously, because there are so many practicals which are there in your PDF and the book which I have given it to you, two practicals if I do, the similar questions I'll give you for homework so that at least your confidence should also build up that you have also done the things and then you are reasonably confident on this one. So ITC topic, I'm going to deviate from the set standard of doing it because we have to also cover up the small topics as well. In the small topics also there are theory which are very important, all the topics. So we just can't afford to compromise on those theory. Okay, ITC is fully practical oriented and therefore it requires more of practice and exposure to variety of problems. That's the reason. So students, non-taxable GST, what are the cases which you have seen? As you know students, in this context over here, the GST which is not leviable, which cases the GST is not leviable? That 5 alcoholic item on that GST is not applicable. Then that 5 petroleum product where there is no levy, that is point number 1. GST which is leviable at nil rate. At which rate? Nil rate, students. And the last one, as you know, GST which is fully exempted. GST which is fully exempted. So these are the 3 particular cases which you know wherein it is non-taxable case and therefore again no GST. So no GST, no TCS. No GST, no TCS. I hope that all of you are clear with this one. Now the next one, in the context of taxable this thing, if it is RCM liability on whom? On the supplier. On the supplier, not on the ECO, on the supplier. If there is an RCM liability, students, in this context, then in that situation what happens? The recipient is liable to pay GST. Recipient is liable to pay GST, and if recipient is liable to pay GST, students, tell me whether there will be a TCS, and the answer is no. Which then leaves us with the forward charge mechanism. Forward charge mechanism on the liability on whom? On the supplier only, students. So supplier is different, ECO is different, and the recipient is different. So in this case, students, if you see very carefully, very carefully, students, in this context, herein, what exactly is the point? 2 per GST registered supplier. And the second one is the GST unregistered supplier. Why unregistered? Because obviously he may not have crossed the threshold for registration till date. And if he has not crossed the threshold of registration till date, students, then do you think that the GST is charged in his invoice? No. So GST not, in fact, GST not leviable, and therefore no TCS again. No TCS, students, in this case again. And in the context of the GST, which is registered supplier, now there is a two things again. One is the normal and another is the composition scheme. Remember that normal and composition scheme? He has got the option to pay as per the composition scheme. Now be careful. In the composition scheme, students, I'm pretty sure that you may have been forgotten by now. The composition scheme, there was this particular point. And what is the point? That if you are supplying the goods through the ECO, then the composition scheme is not available. If you are, then you don't even look into a turnover. One of the non-applicability of the composition scheme was that if you are doing the supply through the ECO, then the composition scheme is not available. So therefore, composition in this context, what do we say? Supply through ECO. Supply through ECO, students. That exactly the point. So supply through ECO if you do in this regard, then in that situation, students, what do we say? If it is a supply through ECO, then in that particular case, then in this situation, please tell me. Just put it over here. Students, just instead of writing like this, TCS not applicable as the composition scheme is available only when the supply is not made through the ECU. TCS not available as the composition scheme is available only when the supply is not made. Only when the supply is not made through the ECU. Is that not clear to all of you, students? And for this normal case, yes, GST is applicable. TCS again would be applicable. So I hope that all of you are clear with this one. Fine, students. Now the miscellaneous point, students. What are the miscellaneous points? When the TCS shall be collected by the ECU. So students, If you remember for TDS at the time of payment or credit, whichever is earlier, that is the point that we have referred here. Now here, students, the TCS will be collected at the time of supply. That is when the tax invoice is issued by the supplier for such supply. So that's the point of time, students. This is point number one. The next one, students, is about the registration part. Now, students, you may be aware of the registration part also over here. Now, ECO, students, two registration would be required. Remember the two registration? Which two registration? As a tax collector, students, in this case, separate registration, which is a compulsory registration under section 24. And what? As a supplier, you'll say, sir, how come he is a supplier? Don't you think that the ECO is receiving some commission for doing all this activity? That commission is his supply which is in the nature of service. What is the service? Service of providing the platform. So what is the supply? Here, what the supply? Supply of providing what? The platform for which consideration is in the form of commission. So as a supplier, students, then a threshold limit will be applicable in this context. Then you will look into section 22 for that matter. Isn't it? You will look into section 22 for that matter. So separate registration as a supplier. Separate registration as a supplier. So you cannot say that, sir, I have registered myself as a supplier. Do I have to still get myself registered as a tax collector? And the answer is yes. And the answer is yes. So that is the registration is a second miscellaneous point. Third point, which is about the ledger. What is the ledger in the portal? For TCS? Just like TDS, there were only two ledgers. Which are the two ledgers? There are no credit ledger. You cannot make the payment of TDS and TCS by using your electronic credit ledger. You cannot use it, isn't it? So therefore, the ledger that we are talking about it are the two ledgers. And which are those two ledgers? ELL and ECL. ELL, students, and the ECL. That exactly the point. That exactly is the point, students. Thereafter, students, if you talk about the returns, returns, students, provision is given to you in section 52 itself in this context. And one is about the monthly return, and second is the annual return. Monthly return, and second one is the annual return in this case. So GSTR 8 and then 10th of next month. Now, students, one important point which is there. Now, over here, students, the annual return, which you know, GSTR 9B, and that is by 31st of December. Now, one important note, students, that you should always keep in mind that tax deductor don't file the annual return. Tax deductor, students, they don't file the annual return. That exactly the point, students. That exactly the point. So I hope that all of you are clear with this one. Every one of you. Fine, students. This covers up your entire aspect of this one. I hope that all of you would have done the last particular lecture. No? The late fees and all are same, students. The late fee, as you know, in this case, rupees 100 per day. 100 per day, student. There was this question, student, that we have discussed last time. Not discussed. I gave you the homework question number 12. Remember that question number 12? In that question number 12, there was this late fee query. Students, I hope that you are also doing those questions, which I'm giving it to you. This was a question that I gave you to as homework in the last particular this thing. 100 rupees per day. That is one thing which you just need to keep in mind. Just a second. What is the maximum amount of the amount of the late fee? 5,000 rupees. Interest rate 18% per annum is also applicable over here. Is also applicable over here. Now tell me one thing, whether the TCS will it be collected, students, on the exempted goods? Whether the TCS will that be collected on the exempted goods, students? Exempted supply. TCS on exempted supply will that be collected? What do you take, students, on that? Then obviously the answer has to be no. The way we discuss for TDS, the same will apply also for TCS. What we discuss for TDS equally will apply for TCS as well. You remember we have done that particular thing on the exempted particular portion, which Rami is there, though it may be captured in the same invoice as a taxable supply, but you will not collect the TCS on that amount. In the TDS part, students, please be careful. One more important distinction was that in the TDS, students, we had a threshold amount of 2.5 lakhs of the total value of supply in a contract, isn't it? So that amount should be more than rupees 2.5 lakhs. Now that 2.5 lakhs should only be of the taxable supply. So therefore, those non-taxable supplies which were there will not be considered to determine the limit of 2.5 lakhs. Over here, students, if you see, so far as the TCS is concerned, did we had any monetary limit that the TCS would be collected only when the contract value is of this particular amount? Answer is no. So even if supposedly, students, a supply of 100 rupees has happened to the ECO, the ECO who is in receipt of the consideration from the recipient, the ECO who is in the receipt of the consideration from the recipient, that ECO will have to collect, that ECO, students, will they have to collect the TCS? And the answer is yes. You'll have to collect the TCS. Let's see question number 14 now, students. In this case, from the following information of independent cases, from the following particular information of independent cases, your expert advice with Aishwarya, Kavita, let's see. From the following information of independent cases, your expert advice with appropriate reasoning is sought on the applicability of TDS and TCS provision of CGST Act 2017. You shall also quantify the amount of TDS or TCS as the case may be, the same is applicable. So you can also quantify the amount of TDS or TCS as the case may be, the same is applicable. Students, if you see over here, point number 1, Top Fashions, a designer cloth dealer and registered in the state of West Bengal, effected supply through Quick Deal, an electronic commerce operator. An electronic commerce operator. Net value of taxable supply, taxable intrastate supply, effected for the month of October 2019 was how much? 1,50,000. Now there is no such great thrill about it. There is what we are supposed to do, 1,50,000 into 0.5% CGST, 0.5% SGST. And this is the intrastate supply only. 0.5, 0.5, that is it. Now please be very careful, students. The terms that you used for answering the TDS and the terms that you use for answering your TCS is very important. For TDS, students, the rate would be applied on the total value of supply in a contract. Whereas over here, it would be, the rate would be applied on the net value of supply. Supply, students, the net value of supply. This is the term that you're supposed to use. I hope that all of you are clear with this one. Please use the term very carefully in this context. That is it, students. This was your 4 marks question, Jan 21 attempt. So therefore 1.5 lakhs into this. Okay. How you present the answer? Presentation of answer, define the applicability of TCS, the two equation, that the supply is done through the ECO, taxable supply through the ECO, plus what? The ECO is collecting the consideration in respect of supply. Then point number 2, applicable rate. Then point number 3, the value. And then on that, you then give the working based on the question. So 1.5 lakhs into this thing. Is that clear to all of you? This is the presentation. This is the presentation, students. So I hope that even the presentation part is clear to all of you. Okay, so this is the presentation. First point, that supply is done through the ECU. All the taxable supply is done through the ECU, and in such supply, the ECU is collecting the consideration. That is point number 1. 2 is about applicable rate, and 3 is about the value. This is what you need to put up. If a specific question comes about the applicability, non-applicability, like that 9.5 case or the other cases that we discussed, agent and principal, so those are specific cases. But in all the question, these 3 points has to be there. You may write 1, 2 and 3, that is fine, but do write in this way and ensure to present it in the best possible manner. I hope that all the presentation is clear, students, every one of you. 2 and 3, students, we already have discussed earlier. This is on TDS, you can just do it. We are done with this payment of tax, students. But tonight, students, 9:15, let's start with the new topic. 9:15, students, tonight. Fine, see you then, students, tonight. Get started with this one. I'll see you then.